Morning, 11:43 a.m. Eastern Standard Time on this Monday, October 31st, 2022. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I want to thank everybody who was in the live, as I really appreciate that. It was a fun hour. Got to talk to a lot of people, talked about a lot of stuff. But I want to move on to this now, this update. So I've got a few things I want to talk about. This is not crypto related, just FYI. Got a few things I want to go over. The dollar climbs as traders eye central bankers. We've got the U.S. bonds, treasuries climb as investors look toward November Fed meeting. I'm going to break down from the 3-month all the way to the 30-year. And then we're going to look at one more thing as well, the Fed jobs, what we're expecting for the Fed jobs data to set groundwork for the rest of 2022 and what to know this week. We'll go into that, but first I want to go into Gregory Manorino, and I want you to see one thing that he said. I'm going to go to his YouTube page, so follow him. It's going to be right up. If you're not familiar with who Gregory Manorino is, pay attention. I'll put his link in my video description below. And if you do decide to join the channel, let him know in the comments that you were, Tom's Army supports him. He's got over 250, what is he at? 235,000 subscribers on YouTube. He's got the MMRI. He came up with the indicator. And he was on Wall Street and yada, yada, yada. So I believe you should watch him and watch this. I'm only going to show you about a minute and a half because I want you to go to his channel and watch it on his channel. But this is a great little look at the market and what he's thinking.
This morning, stock futures are lower. 10-year yield higher. The MMRI, Manorino Market Risk Indicator, is above 280 again, people. 280. You and I watched the MMRI crater after Oink Man and Oink Woman were floated out. Tell the market how great everything was going to be because the Fed was going to pivot. Fed's going to pivot in December, not this month. This month, I already told you yesterday what I believe is going to happen. You're going to get a 75 basis point hike, and then come December.
Pay attention to what he's saying here, ladies and gentlemen. We're going to get into this farther with the data.
We're going to get a 50, and then more than likely, we're going to get pause. And the market is going to go absolutely ballistic off of it. Unless, of course, we get the snapback. Look, the debt market it's too big for central banks really to gain full control. But they're going to try. And they're going to do this by vastly inflating the money supply.
So if you like what you were seeing, go watch Gregory Manorino. He's on YouTube. He's one of my favorites to watch. You guys always ask me if there's anybody that I would watch. He's one of them for sure, 100%. So if you do subscribe to Gregory Manorino, let him know in the comments that Tom's Army loves what he's doing. So the Fed's job data, we'll look at this second. But the first thing I really want to look at, and these are key things that I went over this morning when I was reading, and that I thought you should know as well for what's going to happen this week. And yes, it's not crypto related, but it all plays into what's going to happen in crypto. So the U.S. Treasury yields climb as investors look toward November Fed meeting. So this is just a new inclusion to what I'm going to do in my show. Not all updates will be crypto related. I did a fantastic, almost 20-minute update already this morning. Go take a look at it. I'm not going to overemphasize things, but now I'm going to get into the overall market and climate and what's going on, because not just crypto, not just the gold and precious metals markets, but also what's going on with the Fed, what's going on with inflation, and in the Treasury. We have to know what's going on with our treasuries. From 3-month to 30 years, we have to know. It's also important to understand what the MMRI is, to understand who Gregory Manorino is. He's somebody who was on the inside who can tell you what's going on now. He's looking out for you. So there's certain people you have to understand in this time. He's one that I would put right up there with the Peter Schiffs of the world, and the Robert Kiyosaki's, and the Mike Maloney's, of ones that you need to know. Not a lot of people know who Mike Howell is, but all those people, you need to know who they are. So anyhow, U.S. Treasury yields climb as investors look toward November Fed meeting. Treasury yields rose on Monday as markets looked ahead to the Federal Reserve's November meeting due to begin on Tuesday. The 10-year Treasury yield was up by more than 4 basis points to 4.05%. The yield on the policy-sensitive 2-year Treasury rose by around 7 basis points to 4.497%. Yields and prices have an inverted relationship. 1 basis point equals 0.01%. So you can see how the 3-month all the way down to the 30-year. So the 3-month, 1 year, 2 year, 5 year, 10 year, and 30-year U.S. Treasuries are all up this morning. All of them. Traders are widely expecting the Federal Reserve to hike interest rates by 75 basis points this week. This would be the 6th rate hike of the year, which has been dominated by the central bank's efforts to curb high inflation. Markets are also hoping to gain some clarity about the Federal Reserve's future policy pathway from the meeting, as questions about how high rates will be hiked in late 2022 and throughout 2023 have grown louder. There are concerns that rate hikes are dragging the U.S. economy into a recession, and economic data has been sending mixed signals about inflation. On Friday, the release of the Personal Consumption Expenditures Price Index reflected that inflation remained strong. In September, with the core rate showing an expansion of 0.5% compared to August and 5.1% over the last 12 months. Meanwhile, the Gross Domestic Product, GDP, report released on Thursday indicated that inflation may be easing as it showed higher than expected levels of economic growth. No major data releases are expected in the U.S. on Monday. However, Eurozone inflation and GDP data are due. So today, Eurozone GDP is due. So pay attention to that. So just pay attention to just that little thing. And then let's climb right into the Fed jobs data to set groundwork for the rest of 2022. What to know this week. So this is what's happening this week. This came out yesterday. I'm not going to read the whole thing. The main thing that I wanted to read in here, where was it at? It was one of the very first things I read in here. I didn't want to read the whole thing. So the labor reports, this is what I wanted to read. The Labor Department's October jobs report due out at 8:30 a.m. Eastern Time on Friday morning will also be closely watched. Economists expect 190,000 jobs were added or created last month, according to consensus estimates by Bloomberg. Both events are likely to determine the market's course for the rest of the year. On Friday, the major averages leaped toward big weekly gains. The S&P 500, Dow Jones Industrial, and NASDAQ Composite were up 3.9, 5.7, and 2.2% respectively over the last 5 trading days. So yeah, that's on Friday. So that's what we have to pay attention. So markets face another sizable increase to the U.S. Central Bank's benchmark interest rates, with officials expected. Okay, so we'll read this first part. So we already know the jobs report is due out at 8:30 a.m. on Friday. While the Federal Reserve's next policy move and a rush of employment data will headline a busy start to November on Wall Street this week, markets face another sizable increase to the U.S. Central Bank's benchmark interest rate, with officials expected to deliver a 4th straight 75 basis point hike after their 2-day meeting concludes Wednesday. So Tuesday starts the FOMC meeting, as I was saying. I might have said that on the live or an earlier update. But it concludes Wednesday at 2 p.m. Eastern Time. Investors will also tune in to remarks from Chair Jerome Powell following the decision, along with economic projections from Fed officials and the latest dot plot showing each member's forecast for the U.S. short-term interest rates. So the key things to know here. On Tuesday starts the FOMC meeting. It concludes Wednesday at 2 p.m., followed by Jerome Powell. And then on Friday, we will have the release of the jobs report at 8:30 a.m. It's due on Friday. Today we have, let's see. We had, who was it that has to go? Someone has to do their, I just read it. I think the UK has their stuff is due today. But anyhow, that's what's going on in the USA. And then the dollar climbs as traders eye central bankers. So the dollar advanced on Monday, regaining some ground it lost earlier in the month at the start of a week packed with data releases and central bank rate setting meetings, including by the Bank of England and most importantly the Federal Reserve. The euro slid 0.36% to 0.9932, sterling lost 0.67% to 1.1537, and the dollar rose 0.82% against the Japanese yen to 148.6. As the weakness seen in the greenback earlier in the month continued to fade, the dollar is set for a monthly decline in October, its first since May and only its second this year. on expectations the U.S. Federal Reserve could signal a less aggressive future programming of the rate hikes at its policy meeting that begins on Tuesday. However, late last week, this narrative ran out of steam and it continued to struggle on Monday. Current markets are in wait-and-see mode ahead of the Fed's rate-setting FOMC meeting on Wednesday after we saw a bit of more of a balanced tone from some of the other central banks. Sammy Char, chief economist at Lombard Odier, said. So, and then there was only one other thing I wanted to show on this, because we already know all the other stuff, but I wanted to show a couple of the monies right here real quick. So, released on Monday was data that showed Japan spent a record 6.3499 trillion yen, 42.8 billion on currency intervention this month to prop up the yen. Elsewhere, the Chinese yuan slumped after data released on Monday showed China's factory activity unexpectedly fell in October, weighed down by softening global demand and strict domestic blah 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 curbs. The dollar was last 0.7% higher against the yen traded offshore at 7.32. We expect that the CNY will weaken further in the short term given the apparent weakness of the economy together with more blah 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 cases and expected lockdowns. It becomes even more difficult to be upbeat about the yuan. Iris Pang, chief economist for Greater China at ING, said. Also on the week's agenda is the Bank of England, which will meet on Thursday after a volatile period in British political and fiscal policies. A 75 base point rate hike is almost fully priced in. The Reserve Bank of Australia is tending towards a dovish end of the spectrum and is expected to raise interest rates by a more modest 25 base point at its Tuesday meeting, even as inflation raced to a 32-year high last quarter. The Aussie dollar was down 0.35% to 0.6389. The U.S. dollar climbed 2% on Brazil's real after former President Luiz Inácio Lula da Silva nearly defeated President Jair Bolsonaro in a runoff election. So make sure to hit that like button. I'd greatly appreciate it. If you want to see more information, more ways to trade with me, I have in the video description, there's a way to join Tom's Army. As we had one new member today, so we've hit my goal of one new member of Tom's Army in each day. So that means I'm the happiest person in the world now. All I need is one person each day to join Tom's Army, and I'm very happy. You can find a way to trade with me on 3 different exchanges, as UPHOLD is my most trusted. I have BitGet, but it's becoming harder and harder for U.S. users to use. And then I have MEXC so that I can buy my IOTA, XRP, and all my other cryptos. That has a ton of them, and you can 200x futures trade. You don't need a VPN, you don't need a KYC, and there's no spot fees, and it's accepted fully for USA users, and there's 200x leverage, which is kind of nice.